Alrighty, guys. So it's been a while since I made a video. Um, Man, if you're a trader or investor, you know the markets have been extremely volatile. The VIX was crazy. You know what? Let's actually bring that up. Let's see. The VIX was like 60, 70, I believe, like a couple weeks ago. Oh, it's only at 60. It was only at around 60 in April, beginning of April. But it's come down a lot. Like this is normal. Like since May, I was thinking about you know I'm gonna just say it anyways, 'cause this is my channel. Fuck it. And so I was thinking about saying something to where it's like, man, like this when the markets are like this, it's so stressful. It is so stressful. Like I think the last time I made a video was like the 14th. I was thinking about saying something like adding to my strategy, like, man, anything between like when the markets are between like 25 maybe to 20 VIX, I might trade because like these markets are like bearable. Like I can trade and I'm not stressed. Like I was dealing with some crazy stress. Like April, May wasn't too bad to be honest with you. May wasn't too bad, but like April, oh my god, stressful. I mean, super stressful. I mean, I was still bullish because I mean, whenever you have VIX this high, it's like, why would you, really be looking to sell? In my opinion, you know, usually when VIX is this high, I mean, it just when was that like August 24? When the VIX is high, I mean, it just somewhat makes sense to buy, in my opinion. But anyways, I digress. So, I was gonna look at this video by Forex or FX Poetry. Pretty cool video. I was like, man, I there used to be a thing I would pay for to just talk the text, but I just copied the text and put it in a chat GPT and it could read it for us. So I'll have chat GPT read the article for us. I would definitely check out his Substack. I've been following him for a long time. And let's check it out.
The doldrums of summer are here. And just like occurs every year, most markets compress as pundits profess. The future for them's crystal clear. But truthfully, nobody knows the things the next week will disclose. While there is no doubt, big change is about, 'twill likely be months till it shows. I wish there was something interesting to discuss this morning in any market, but the reality is some days the newsfeed has nothing of note. Surveying the headlines shows that despite the tariff uncertainty, equity markets, as per the MSCI All Country World Index, traded to new all-time highs. Maybe tariffs are not going to be the end of the world after all. Adding to this story is the fact that corporate credit spreads continue to compress, a clear signal that concerns over future economic activity are not that significant. A look at the chart below shows that the current level below 100 bpsecs is the exception, not the rule, when it comes to perceptions of debt risk. In fact, the current reading of 0.91% is in the 13th percentile, well below the long-term average of 1.49% and median of 1.29%. My point is, although the political lens through which so much news is presented continues to scream that everything the Trump administration is doing is an existential threat to the global economy, it appears a majority of investors have taken a different view. So, I guess it's good times for all. In other markets, the dollar's recent modest weakness continues to be highlighted as the beginning of the end of its reserve currency status and another existential threat to the US. But again, one cannot look at a long-term chart of the euro and believe that we are on the edge of the precipice. The EUR-USD exchange rate has been both much higher and much lower during the euro's lifetime, which began back in 1999. It's summer, folks, and oftentimes throughout my career, that signaled a significant reduction in market activity, liquidity, and overall movement. This is not to say that something untoward cannot occur before Labor Day, but perhaps this year we'll see a summer lull. If pressed, I would say that the key risks to the idea of a true summer of doldrums would be a significant increase in the probability of a global conflagration, where both the Russia, Ukraine, and Iran talks go off the rails with more kinetic activity in either or both places. Certainly, if China were to invade Taiwan, that would change things. And perhaps if the Big Beautiful Bill fails to be enacted, prospects for the U.S. economy would decline as tax rates would rise dramatically. My take is That would not be good for either stocks or bonds, and probably not for the dollar either. History, however, tells us that assuming little or no change is the best bet for the immediate future, so I don't see any of those things happening. In fact, my take is financial markets are becoming inured to most of President Trump's pronouncements at this stage. Given the movement we have seen in equities and credit spreads, it appears to me there is already a strong assumption of some trade deals to be announced in the near future. Maybe that will be a sell the news event, but for now, there is precious little about which to get excited. So let's see how things behaved overnight. It oughtn't be surprising that equity markets around the world are higher since the MSCI index, as mentioned above, is setting records. So, solid gains in the US yesterday were followed by similar type gains in Asia, Japan plus 0.8%, HK plus 0.6%, for Australia plus 0.9%, with the latter rising despite weaker than expected GDP growth in Q1 of 1.3%. In Europe, too, gains are the general order of the day, with Germany 0.5% and France 0.5% both in fine fettle, although Spain minus 0.3%. Is today's aberration, as PMI data there was weaker than expected. Perhaps the blackout had a negative impact. I guess we oughtn't be surprised that US futures are pointing slightly higher at this hour as well. In the bond market, apparently everybody took Ambien today, as yields are within 1 BP of yesterday's closing levels in the US, Europe, and Asia. I will take this as no news is good news. In the commodity complex, oil is stuck near its recent highs and unchanged on the day. Some might argue this is a triple top as per the chart below, where a break higher would target something on the order of $70 per BBL and closing that huge gap from April. However, given the general lack of activity, there doesn't seem an obvious catalyst for that type of move. As to the metals markets, the extra bond market Ambien was distributed to those traders. Finally, the dollar is mixed with the overall situation, at least as defined by the DXY, unchanged. So AH at 0.4% has rallied a bit, while JPY 0.2% is sliding a bit. In fact, most currencies are within 0.2% of yesterday's closing levels, although NOK plus 0.5% is today's big winner as continued support in the oil market helps the krone. But there is nothing to get excited about here either. On the data front, ADP employment XB150K is probably the most interesting number, although we also get ISM services 52 and then the EIA oil inventory data with a modest build expected across products. The BOC meets, and nobody expects any policy rate change there, and Atlanta Fed President Bostic speaks. But again, who cares at this point? Quiet is the name of today's game. It wouldn't surprise me if that is the rest of the week's MO as well. Although at some point, we will definitely see a break in one market that is likely to be contagious. Until then, good luck at EF!
Yeah, so I mean, for one, I'm kind of glad that I had the idea to use that. But anyways, I was talking to my dad, I think a day or two ago, or maybe we were talking about it today. I don't remember, but we were talking about oil, and I was telling him that, I think oil is going to probably go to about 70. I could see it going a lot higher. I'll just bring up this one. Just bring up this. So if we look at like this, you kind of have like an area of supply. I didn't even map it out like that. You kind of have this area of supply at like 68 to 70. And every summer, usually you'll see, oil have a decent rally. So this is 24 June through July, like mid-July. June, it really started to pump up in July and August in 2023. Actually, it came down here in 2022. I don't know if there's a reason why it came down in 20. Well, I mean, when you see this, it kind of makes sense that it would come down. I remember this rally from when the Fed was talking about starting to raise rates, so that makes sense. But yeah, seasonality wise, like usually oil, and you can see here too, like June, July, usually like around the fall it kind of starts to come down. But anyways, I could see oil going up. I'm still bullish. The indices, The hardest play for me, like plays, has been like me trading currencies. Um, Currencies have been so tricky. For like the last few weeks, like you used to see, like just chop. We'll just look at the yens. Just chop for the most part on all the yens. Um, just a whole bunch of chop. Now, of course, if you're going, sorry, of course, if you're going down to smaller time frames, like it seems like decent movement. So if I'm trading on a 5 minute, it's still decent. But I just mean as far as like getting like some crazy extended moves, it's just forex has been pretty like dull. Um, but of course, I'm mostly just trading the indices, mostly trading Nasdaq. I think I placed a couple trades on like within the last month or two. I traded a little bit of the S&P. I haven't really traded the Dow too much, to be honest with you. It's either been Nasdaq or S&P for me. Um, and I guess like something that I guess I could say is like usually when you're looking at the Nasdaq and the Dow, these will have like the most divergence with each other, and usually the S&P is kind of like a middle ground between these two. So like sometimes you'll see the Nasdaq rally and then the Dow drop, but then S&P will just be sideways. And then sometimes you'll see all of them rally, but there will be like a laggard between one of them sometimes. But yeah, I mean that's pretty much it. I think my mentor wrote an article about Bitcoin. Probably dropping. I think it was like a day or two ago. Um, so we'll probably do a video on that later. But yeah, so markets have been, I mean, I wouldn't say dead, but they're not moving like they were in April and a decent part of May. And it is the summertime, so sell in May and go away. Let's see if there's like a decent article. Um, what is the thing that I wanted to look up? Oh yeah, sell in May and go away. Oh man, let's see if there's even a better article or something. Anyways, we'll just do this one. Sell in May and go away. It's just a thing in like trading and finance. Sell in May and go away strategy, which entails buying in January and selling in May. From May through December, the portfolio earns. I'm not even talking about all that. Usually, like between like May, so like usually, like, I'll say June, July, it's kind of dead. Like they're like the markets don't have as much volatility, which is somewhat decent. I mean, after you think about the amount of volatility we had in April, it was stressful. Like trading was so like I mean super stressful. Let me actually go here. We just bring up the this contract. So like I made a I'm not gonna do it. I'm making a whole nother video. But I was talking on like Facebook and Instagram about buying down in here. Like I said, when that VIX is so high, like VIX was like 60 here, it's like it makes sense to buy. Like I don't know why everybody's like, oh man, like the market's cranked, like tanking, like we need to sell everything. Like people panic. And I'm not saying that like you didn't have any right to panic, I get it, but like man, like these are the opportunities where it's like buy the dip. Everybody talks about buying the dip, but everybody's afraid to buy the dip. People want to talk about buying the dip up here and then get destroyed, and then, oh, buy the dip, buy the dip. Oh, then I sell, and it's like this is when you really need to buy the dip. Like, come on, what I'm saying? Like, I'm not trying to sound like be an asshole or anything like that, but I'm just saying it. Like, come on, like these are the opportunities where you can really stack to your portfolio and get crazy returns. Let's see. We'll just go from like the low to now. Look at that, 32.1%. Like, come on, come on, come on, come on, come on, come on. Like, this is when I'm not saying you're gonna get the low, so I give you that. But like, even if you bought here, I think I meant when I made the post, it was like here. It was like one of these 2 days. I think it was Monday. Yeah, okay. So Monday, the 7th. And then I put the post on. I said about this on Instagram on this one financial guy's Instagram. I guess a lot of traffic. And it was me and another guy. We were like, this is the time to buy. And everybody was talking crap to us in the post. And like, you guys have no idea what you're talking about. And we are like, okay, I mean, I don't care. Like, you know, I'm just telling you what my viewpoint is. And then people are like, you don't know anything. Like, the market's going to tank and blah, blah, blah. Like, I think this was like Sunday. Sunday is when it happened. And then Monday morning, everybody, like, we were talking about being wrong. And then this is when Trump said tariffs are going to be paused or something like that. And then I think I made a video like somewhere around here, like the 14th, somewhere around here. I made a video and I was still trying to get long. And then late April is when I've just been long this whole time. I mean, I've still had shorts like intraday, but like, I think like this morning I had like some shorts. I think anyways, just to be transparent, you know, I had some shorts like right in here. And I was long this morning here. Like market open at 9:30 here, and I was long. Got stopped out on the position I had up here. Got short like here, and was starting to get long again around here. And yeah, so I mean, intraday wise, long, short. Overall portfolio wise, just long. Like I don't see the point in going short. And to even talk about that, like I was talking to one of my buddies, like my old coworkers, and he wanted to go short like right around here, or maybe it was here. It was somewhere around this when we were talking. And I spent like an hour and a half trying to just tell him like, dog, like I understand that you want to go short, but like there's so much upside to like the momentum of what's going on right now. And he was trying to go all in, and I was like, bro, like I was telling him to do some option plays. I was like, dog, just buy a put, like a deep out of the money put, and if it works, great. But if not, you're not risking all your capital in a single position, and you can make your money back. Hopefully he listened to me. I'm gonna hit him up after this video and see, but because we were somewhere up in here. I think it was actually like right around here. So it was like yep. I think it was probably like Thursday the 17th of April. And it probably worked out for him that next day or on Monday. And then, you know, I don't know, but I mean, hopefully he listened to me and he just put like, I think I told him to do like maybe 1 or 10 contracts on SPX. I think he wanted to trade the SPX, or maybe it was I think I told him to do SPY because it's cheaper. I think I'm told him to do SPY because it's cheaper for him to buy the deep out of the money put options than trying to do SPX. Because we used to sell a lot of options on SPX together, and then I was telling him that, you know, selling these options on SPX makes sense, but if you're gonna buy the option, it makes sense to buy it on SPY because it's just so much cheaper. Your cost basis is a lot cheaper. Now you don't get the tax benefit that you do on SPX, but anyways, I'm kind of drifting off. But like I was saying, it makes sense to buy when this VIX is high. Now, like when the VIX is low, and you want to start selling, like right now, if you want to start buying puts up here, it makes sense because you still want that. You want the, like when you're buying when you're trying to buy puts, you want to buy it when the VIX is low. So like if I were to buy, like, so let's just say in December, if I were to buy put options down here when it was like 13, it makes sense. You know, or even here in February, you know, when it's like at 15, it makes sense. But when you're trying to buy these put options, if we were talking about it on the 17th, and the VIX is at like 30, I mean, you kind of have like, you have so much kind of going against you. And I'm not talking bad about my boy or anything like that. I'm just saying that like when you're trying to talk about like trading and investing and stuff like that, there's so much risk, just inherent risk that just come with like putting capital, like deploying capital. For one, just placing a trade sometimes is hard, you know, like, and then let's not even get into like all the research you do and all that jazz. But, you know, I know I kind of go all over the place with these videos, man, but it's just, I really love talking about trading and investing and stuff like that. So, and I'm pretty sure some people are going to watch this video and be like, man, this guy's a fucking idiot. But I mean, hey, like, I'm an idiot that sometimes makes money. You know what I'm saying? Like, I lose a lot of money. Like, I also, so I'm not you saying that I was like some type of market wizard or genius, but I lose a lot of money. Don't trust me. But you know, I do well. You know what I'm saying? Like when I'm in my bag, I'm in my bag. You feel me? So, anyways, like I said, now what somewhat makes sense if you wanted to go short. I don't know what's gonna happen for the short, but like we have all of this whole area of supply. And if you don't like to talk about supply, you could call it resistance. You know, we've been here for like what, almost a month in this little area. Um, so I mean, you know, if you decide that you want to sell, I mean, that's fine. I mean, like the VIX now is low, 17.6 isn't that bad. You know, when you know, you want to buy, you know, at these low areas, and then you want the VIX to inflate. That way, you know, these cheap options become, you know, very inflated, and you make a decent amount of money on those puts. But yeah, anyways, super dope video, not video, but the super dope article by FX Poetry. Definitely check him out. I'll put his video in the link, or not video, but Substack in the description below. Hopefully we could talk more about trading. I mean, my views don't really change too much when it comes to trading, other than like when I'm day trading. But from like the macro perspective, I mean, it seems like a lot of people are, you know, kind of have a similar viewpoint as I don't know how to pronounce his name, so I'm gonna just say FX Poetry. Like a lot of people have the somewhat similar views that, like, you know, it's the summertime. You know, you probably made a decent amount of money, especially if you bought down here. I mean, you know, take your kids out, take your wife out, you know, take your they them out, you know, you know, take your you know, I guess if you're a female trader, take your husband out, you know, splurge on him a little bit. You know, if you're a female trader and you got a wife, you know, take her out. You feel me? If you're a homosexual male trader, you know, take your husband out. You know what I'm saying? You know, I know I'm kind of hitting every aspect, but you know, who knows who's watching this video? You know what I'm saying? But anyways, I'm kind of talking some bullshit now, so we're just gonna call it a video. Oh man, I cussed and I was on this guy's page. Man, hopefully, if you see this, you don't mind me cursing a little bit, and you don't tell me to take this video down because I cursed and all that jazz. But anyways, man, I hope you guys enjoyed the video. Since the market volatility has died down a little bit and it's the summertime, we'll start making a lot more videos. And I love you guys. Appreciate you watching the video. Peace.
Man, even Jesus had a shooter, and God be having unbelievers that didn't mess up their demeanor. And yes, they know it's hard, they know, cause when they be up in those trenches, man, they show out.